98% of traders do not know these 4 powerful pullback strategies, but you will master them by the end of this video. And I will start with the basic pullback strategies and all the way to the advanced and most profitable strategies so that you can understand everything. Let's get started. Before we can get into the first strategy, let's start by noting some important information about what pullback is made up of. The pullback is made up of a swing and the pullback part itself, which is also known as a retracement, and all the pullback has a similar structure. Now that you understand what the pullback is, then let's get into the first simple but yet powerful pullback strategy, which is a pullback setup combined with volume indicator, which is also going to give us the volume data which happened on each candle. Let me explain what all this means. So what makes the pullback powerful is how strong the swing is compared to the pullback or the retracement part itself. And this is the most powerful information that any trader should know before they take any pullback trade. And this is where the volume indicator comes in, which will give us the volume behind each candle. So here is some important information. We want the volume to be high during the swing, and we want the volume to be low during the retracement or the pullback part. So this information is powerful because the higher the volume during the swing means that there are a lot of buyers, and when the volume is low during the retracement, that means that those buyers didn't cash out, which means that there is a higher probability that the market is still going. And this information is very necessary for any trader to consider before they look into taking any trade, especially the pullback trade. Now let's get into the next powerful pullback strategy, which is to identify the pullback retracement barrier or key level so that you know exactly where to place your trade and stop loss. So in order to find the correct key level, we need to know exactly the price area where there were big volumes of trades. So the best way to do that is to go to a smaller time frame, like 3 minutes in this case. This is so that we can see the details that are hidden behind the swing, so that we can make the right decision and see exactly where the volume started. So in 3 minutes, we also need to bring in the volume indicator so that we know exactly where the strong volume started, which will also tell us where a lot of trading activities has taken place. So this area here where there are a lot of high volumes, that means that a lot of trading activities were happening. So this pin bar becomes powerful in order to help us draw our key level. And because of what this volume is telling us, which is where a lot of trades happened, then we'll draw our key level exactly on this pin bar, or exactly where this pin bar started on. And now that we have drawn our key level correctly, now this is where the retracement will come and bounce before it continues with the trend. I've created the most powerful video which goes deeper into finding pullback key levels. Make sure you watch it after this video. The link is in the description below. The next powerful strategy, which is also my favorite pullback strategy, is pullback correlation. Let me explain. So since this chart is an Aussie CAD currency pair and is in 1 hour time frame and in an uptrend, then that means that the Aussie is the one that is strong compared to the CAD, which means that CAD is weak, and that is why the trend is pushing up in this swing. So now what you want is that the CAD should be weak across the board, which means that it should be weak across all the CAD currency pairs. I've just listed 4 here for this example, but it should be weak on all the CAD currency pairs, or at least in a number of them. Because the CAD is weak, you will see that the Aussie, for example, in this case is pushing the swing up, which means it's pushing the trend up. The same thing here, the GBP is pushing the trend in the up direction. Also the USD is pushing the trend in the up direction. And on this one, because the CAD is on the left, that means that the market is gonna go down, or the swing of that pullback is going to go down, because the Japanese yen is the one that is strong in this case. So this strategy is very powerful because it's like a cheat code which tells you exactly which direction the trend is going. That means which direction the pullback is going that we are trading. The next super important strategy is the reason why so many trades fail in the market, and I call it Pullback Top-Down Strategy. Let me explain. If you spot a pullback in 1 hour time frame, then make sure that when you go to a higher time frame, like 4 hours or daily, then make sure that the pullback is not coming from a key level of a higher time frame. So that means that on this smaller time frame, this top of the pullback swing is not on the key level in the higher time frame. That is very, very important, which also means that where the retracement started going down, the starting point should not be in the key level in the higher time frame. This is so that you make sure that there are no obstructions in your uptrend where you have spotted the pullback. This information alone will increase the probability of your trades. Because in most cases, when the pullback retracement happens, that means that where it started is the key level on the higher time frame, which could mean that this trade will continue going down instead of pullback and going up at the key level. To expand on this topic, check out this powerful video here.